Hey, best ever listeners. Welcome to the Best Ever CRE Show. I'm Amanda Cruz. Ash is not joining today. He is traveling, but we do have an awesome guest joining today, Billy Brown. Billy is joining us from Nashville. He is an active investor as well as the founder of the Investors Capital Group, which is a boutique commercial loan brokerage that helps their clients with strategy, debt structure, and loan placement. Billy's portfolio consists of an 82-unit multifamily building in Kentucky, as well as a triple net office building in Wisconsin. Billy, thank you for joining us. How are you doing today?
I'm doing fantastic, man. It's great to talk to you. Sorry we couldn't have Ash on here, but we'll just talk about it behind his back and have
For
fun with that one.
sure, for sure. And I'm excited to chat with you today. And before we get too far in, can you give the best ever listeners a little bit about your background and what you do now?
Yeah, so my background is a little bit interesting because I actually have a background in professional golf, and that's how I end up in commercial lending. Long story short, I was trying to get my card back in 2008, and we know what happened then. One of my sponsors was a mortgage company, and he had to pull back in 2008 because what happened, and end up being just dead ass broke. And had to email him going, "Hey, what do I do? I'll go clean toilets." End up becoming a residential loan officer. Didn't like it. He's not going to listen to this. So I hated it because it's like too inside the box. I'm not an inside the box thinker. Long story short, got into commercial through becoming an investor. And now I teach on this. So I'm teach on, place on it. I love the idea of leverage. I love the idea of partnering and just love the idea of passive income, especially real estate and businesses. So it's fun.
Okay, let's start with your portfolio of active investments. And I definitely want to get to the brokerage side as well. But let's start with your active investments. So you have multifamily and commercial. Why both? Why the mixture? How did that happen?
So, and there's a third one we're not going to talk about there, but that's not active anymore. But it was a startup. But so the 82 unit, and this is the kind of way it started. I actually had we got a short term rental, and I was opposed to short term rentals until I started doing loans for guys that had short term rentals in their portfolio, and I went, holy crap! I got to actually see their tax returns. It wasn't a joke. So I got one of those. It turned out to be an absolute freaking train wreck. Best break even deal I've ever had. I mean, I was the 3 months after it, it was just bad. That's Nashville laws and all that came up. So it wasn't anything like terrible about short term rentals. It was just like the whole thing about Nashville. But then I was doing loans for guys that are actually doing multifamilies. These people, they self-admittedly couldn't spell multifamily, somehow orchestrated these multifamily deals. I got a little jealous, quite honestly. And I went on a local meetup and said, I'm tired of y'all doing this yourself. I'm going to do one too in front of everybody and live stream and all that. And by the time I'm speaking and speaking at that event in like 2 months, like I'm going to have a 100 unit apartment complex and 8 cap, blah 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 blah. I'll show you that later. But anyway, found an 82 unit and an 8 cap up in Kentucky. That was in 2019, and then full circle, it's under contract right now to sell. So we bought that I think 2.7 as a syndication. Put probably $800,000 into it. Going to sell it for roughly 4.4 right now. Won't make a whole lot of money off of it, but it's making our investors money back and a little bit. And then it was a kind of pain in the ass, quite honestly. So we'll get into that one later. But and then the office complex we also bought in 2019 because I was like I did one apartment complex. Quite honestly, if you're doing loans for stuff like this, own your own, it's kind of boring. I'm not gonna lie. It is like they're just not exciting because I don't really care. I don't look at the damn thing. I'm not gonna go up there. It's like I can tell you in my sleep what these things are gonna do. It just didn't excite me. So I was like, what else can I go do? And we started trying tying together things of the concept of and not then. So we're trying to combine how do we go have what we want, which is a passive income in places where we're going to travel. So it's a tax write off and produces cash flow, all that. So I was married at the time, and we bought this 10 cap triple net lease office condo up in Wisconsin, which happens to have a lot of golf there. And so it paid for a lot of things. Now 2019 was great. 2020 is not so great. So, but it's still going. It's still positive cash flowing. It's just when the lease is up in a couple of years, we're gonna have to probably redevelop the whole project. So you'll have to have me back on in a couple of years to figure out how we solve that big problem.
All
But
right,
meantime, it's
so
going good.
you said something really interesting. There are a couple of really interesting things there. Let's just start with the office building. You bought this at a 10 cap. which is a really high cap rate, but then you just said we may have to redevelop the entire thing. Did you plan that when you were purchasing it at a 10 cap that you may have to do a whole redevelopment?
Well, the whole area where that thing is at is awesome. It's in an opportunity zone. There's a lot of TIF credits right there, and you just kind of see it. It's like this little sleeper community up in Wisconsin that is prime for redevelopment. They just they need some stuff coming in there. I mean, I was like, well, if we can control this one piece of it, then we can start assembling around. Well, I mean, I had a lot more bandwidth back then, so the idea was to go start assembling the pieces and go do a huge project there. But I mean, probably the exit on this thing's going to be because it's a building that was built in the 1890s and then redeveloped in the
Wow.
1990s. And it's just beyond nice life. I mean, you could go rent it out as their office and not get a whole lot off it. It'd be good, but what it needs right there is a hotel. I mean, it's right there by the river in Lake Michigan, and it's just prime for a nice little boutique hotel. But yeah, it's we held it for cash flow. We had thought the tenants that were in there, because it's a large CPA firm that had been there for 20 years, 30 years, that they would renew, and they just decided not to renew.
What did you buy that building for?
Understandable.
How big is it?
12,000 square feet.
And so your office tenants were in there for several years. You were hoping to get another 5-year renewal out of them?
Yeah, they had a couple extensions in there, like a totally another 12, 13 years, something like that. So it would have been a 20 type year.
But now the building's not. So let's say you, instead of flattening it and trying to sell for land value, is it worth kind of upfitting the building some to get another tenant in place? Like, what would you get in rents?
I think it's the building itself is cool, but the amount of money it would take to go upfit it to attract the right tenants and where that thing's at. A lot of the white collar stuff is moving in a different direction. So this is more like entertainment district type area. So this would be a small piece and for a larger piece of an entire big redevelopment where you'd have a luxury like Whole Foods or a Trader Joe's down there, and you have some entertainment, and you have some nice hotels for these big events coming in. So yeah, you could, but long term, this thing needs to be scraped.
What do you think you can sell it for to somebody else who wants to do that project?
I don't know. No idea. I've got a couple other fires to burn or projects to take on before we look at that. We got another year and a half. We're digging into that thing. We would probably redevelop ourselves and or partner with somebody.
Interesting. Okay.
But I know this.
Yeah, I want to hear in a year and a half what you end up doing with it. And do you have a loan on the building?
So local lender, that's a whole other thing we can go into the loan side there, because I didn't take my own advice.
Yes, please tell us about what happened.
So everyone knows I'm a commercial loan broker, right? So this is what I do. I do this every day. I have like all the contacts in the world. So I called in a favor. It's like, all right, local favor, like for this lender, is like they told me this is what we want. It's like, okay, well, cool. I've got this deal. Here it is. I mean, it checks it. I mean, it's like, if you look at the numbers when we bought this thing, I mean, this thing is a debt service is at a 1.5, and it's got a long lease. It's got a corporate tenant guarantee. It's like it's check. We're great sponsors. So we put off this local lender, went off, did my stuff. Later at the 12th hour, they call me and says, yeah, we got this all the way signed off to the bank president signed it. And this is like a week before closing. I'm like, what the hell? Are you kidding me? Are you guys insane? It's like, we don't know what this town is. Like, blah, 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 all the whatever. 2 days before we're going to go on vacation, we have to be up there. So I am on vacation on 4th of July with my family when I should be relaxed. I have to pull out the Google Sheets or the Google search term and start searching for lenders locally. I made on my vacation like 30 phone calls to lenders, talked to 10, and I knew my criteria, and went from 10 down to 3. And met with those 3 the Friday. So that was unfortunately on Thursday, Friday the 5th. 3 of these guys in their office there was like, I need to meet with y'all. So I spent my vacation meeting with bankers and lenders. And that was 2 full days of my vacation on that. And I got done. I'm like, why the hell did I would have gladly paid a broker. Like, what was I thinking? I was like, I would have gladly paid a broker to go do this. They would have like done this for me. And I would have had like 3 phone calls with people and then, picked it and went on. So, word of the wise as far as the power and the value of a commercial loan broker, y'all, hire them. Don't waste your, like, if you, unless you, and I do this every day. Like, I do this every day. So it's like, oh, I can do this. I can
Yeah,
patch this
exactly.
wall. I
That's
can
the
just,
entrepreneur's dilemma, right?
simple.
Especially in this space. Yeah, I can do that myself. And then, you leave a 40-hour a week job to work 24/7 because you can solve all the problems, right?
And I'm saying, I'm thinking about this with the cost of my time, not only my sanity with my family and all that, but it's also like this is money we spent for a vacation that I wasn't able to enjoy. Plus, if it's a normal work week, like how much valuable is more my valuable is my time to go create more loan work for us than handing the small loan
That's
off to
right.
somebody
Okay.
else.
And so going back, hire the loan broker. You happen to be a loan broker.
I loan
We're about
broker.
to start 2025. Tell us about the lending landscape right now.
Oh, we don't have enough time for that. Oh my gosh, it is freaking crazy right now. So we actually did an event here in Nashville post election and had some lenders involved and actually Bitcoin and now like this is the crazy thing. I'm telling you this kind of the bigger story here. So you have like this interest rates are usually for the borrowers are usually priced off the 5 year, 10 year of the SOFR, and it's in opposite conjunction of the stock market. So stock market goes up, the bond prices have to go up to compete with the same dollars. That's your price of dollars. Well, now you have this thing called Bitcoin. So your flight to safety in both, it can go from stock market to the 5 year, 10 year treasury. Now Bitcoin, Bitcoin went up like 30 or 40% in a month. So now all these competing factors there where like interest rates should have calmed down are now still staying high because we think the economy is going to grow. Now, the lending landscape is a little bit different depending on which way you go. Obviously, agency debt's still there; it's still guaranteed by the government. There's more money available now in the world for multifamily and all that. Depository lenders are up a creek. I mean, the extend and pray that they're doing right now, especially they have a lot of CRE on their balance sheet, both multifamily and just commercial real estate. I mean, 2025 is the D day for them. They have to either go reposition us, refinance it, more likely cash and refinance, or they're going to be taking a lot of keys back, and they do not want that. So there's could be some opportunities for some distressed buyers, which there's a lot of funds out there ready for that. So good luck competing against that. But the lending for banks is going to be extremely difficult. Non-banks have a lot of money, but you're still paying, 300 probably 300 basis points above the 5 year for that money.
And so what do you think is going to happen in 2025? I know every real estate investor was excited when the rates started dropping in September, and then a month later, like, hold on, hold on,
Right.
what's going on here? And it doesn't appear that that's going to change in 2025, right? It's not like the interest rates are going to all of a sudden drop in 2025. Now we're really looking at longer term, higher rates. How does that play out next year?
I think we're in this higher rate environment for a while. I mean, it may come down a little bit. I mean, think about this. They've already forecasted two cuts. In November's already happened. They'll do another one in December 25. And the Fed's already told us that they're going to cut off. Now that's federal funds rate overnight rate. That overnight rates that does not necessarily get passed on to the borrower, and that's a depository institution. Everyone else is on the 5 year and 10 years, so that's market driven. So think about this: if the interest rates only come down in a market that's going down, so if you think rates are going down, that means you think the economy is going down because all the money that's going to the stock market would be in the stock market because that's growing and is now flying into safety into 5 year, 10 year treasuries and now Bitcoin. That's something to think about there is like you can't have like, hey, it's a growing economy and lower interest rates. That's causes inflation. So they're probably going to keep the overnight rates probably where they're at. I think prime may come down a little bit, but I mean we're in this probably 5 year, 10 year handle of a high threes, low fours probably for the next 6 months. Again, back to rates only come down when the economy is going down. to go stimulate the economy.
What does that mean for
It's not going to happen.
these kind of extend and pretend loans that are out there and that have been extended and that are still out there? What do you see happening?
I mean, it depends on which lender has it. I mean, the Fed's usually going to come in and rescue some of these banks anyway. So that's our money going there. Let's just be honest. But they'll have to, the borrowers that have been honest with the lenders, they will help out. And there'll probably be some kind of like write off on there and the personal guarantees and whatever. They'll throw the keys back and move on. The borrowers that were not honest or the newbies are going to get shellacked. I mean, they're going to get taken to the woodshed. It's going to be bad. We're starting to see it kind of bleed over. As far as the exposure and all that, I mean, the mark to market is bloody right now. I mean, it's going to get worse because the values aren't going to go up. The only hope there, and this is kind of the consensus, is like when we had our event here in Nashville with some really freaking smart people, inflation is not going away. They're still going to print money. It's like the only hope for this is for incomes to come up. And like, how quickly can that come up where you can go raise rents where people can go actually go afford it? That's the economy stimulating where you go need it. And now you're hoping that you can go increase your rental rates enough to go cover the debt service because you're hoping your borrowers can go or your tenants can go cover that too. So I think a little bit's going to be helped by the increase in disposable income, but I don't think much. It's still going to be pretty bad, I think.
Billy, obviously there's a lot of office distress, but then, on the multifamily side, a lot of this was bridge debt placement, right? That's coming due. How do you see bridge debt as a tool in 2025?
I think bridge debt is great. The people that in the multifamily went from the bridge agency and are penciling in, hey, we're going to get bridge debt at 9 and we're going to get agency debt at 3.5. Obviously, they're toast right now. That's probably in the 5s right now. It's just not going to pencil, especially when you're thin anyway on your coverage. There's going to be need to be cash and refinances. There may need to be another bridge debt, but like these bridge lenders are going to want to see a debt service coverage of a 1.0 and plenty of reserves. They're not stupid. Most lenders don't want to take over other people's loans.
And what about for new loans?
So
Are you still recommending bridge debt going into new purchases today?
I mean, it depends. I mean, not to sound like an attorney, but it depends. I mean, if it's if you're buying an existing stabilized asset, you don't need bridge. If it's not stabilized, obviously, doesn't meet agency criteria, you're under 90% occupied the last 90 days. Depository lenders aren't going to even touch this stuff unless it is close to agency criteria. If you need a little ramp up time, then there are some lenders out there that will do like a hybrid, a mini perm that will help you out first with CapEx or IO. Like, hey, if you want to make it pretty, be able to justify your rate increases, be able to get in management and then ramp up, they can do a 12 to 24 months type IO and then perm it out after that. But the full on bridge where it's like, hey, you've got a hard cutoff of 2 years, you're paying double digits. I mean, that's for the rare instances where you're trying to buy something really distressed and it needs a lot of ramp up and there's a higher upside there. You better be, in that 65% as is loan to value 65% loan to cost number and, probably 50% loan to value upon stabilization.
Billy, you're seeing a ton of projects right now, just being a broker. What are some mistakes people are making that we should be looking out for?
Oh my gosh, that's a whole podcast right there for a couple hours. I see it all the time. Newbies, I would tell you this. In looking back on my career, I probably should have done this. People say, oh yeah, you need to be a small sponsor of property first. I suggest being a JV or a passive like even debt investor for this project for people that are actually very experienced, because you can learn parallel side by side. And as a debt lender, private debt person, or like conglomerate debt people, you are in first lien. If you're in equity position, you're second to the lender. So why not be first lien and be, get to learn as well. And they owe you money versus the other way around. So I'd say that's probably one of the best ones there. There's a lot of other creative ways to get your toes wet and learn without being like risking your capital, financial capital, and family's net worth that you can go do. People that like doctors, lawyers, all this, we see them, get the ego thing. I can go do this, and I can go sponsor a multifamily project on my own and have my full-time job and career. Say no, real estate investing is not passive. It is not passive at all. It is another job, and I use this quote a lot. You'll see it a lot. What we create owns us. So everyone out there, listen to this. What we create owns us. If you go create an investment or a vision or a dream or whatever, you're stepping into that thing owns you. It's not going to be passive as you put it on the side. You got to be active in that thing to go get it right size. And where the rubber meets the road is inside, the ship as you're steering this thing. And you better know and better have a team with you that can go steer this thing when hits the fan. Because Murphy loves real estate. And it's just, whatever can happen will. And you better have the chops to be able to go do it. That's why bank lenders or debt lenders don't want to operate. They just want their checks coming in. Yeah, they'll get the upside, but guess what? They don't have the headaches as the sponsors. So there's a couple that I've lost there that I recommend.
There's a lot of debt lending right now, right? That seems to be preferred almost by LP investors right now, probably for the exact reasons you just mentioned on the risk side. Where do you see that going as we get into 2025?
Growing, absolutely growing. I don't think the depository lenders get their head on the sand until 2026. I think the non-bank lenders, the CMBSs, Lifecos, credit unions, all that, are going to have a pretty good runway to be able to operate in the market and on our market, as well as private debt placements. I think it's going to grow. I think people are tired of they're tired of getting run through the ringers on stuff. Now, and again, I'm a lender, but there's a point at which you go, it's just overkill. But they have to be because of regulatories. So people are leaning towards that, let's say, lighter touch, but like less overkill. The lenders are friend. They have a ton of resources to go keep your butt from getting hurt by like really bad deal. And I see it. That's the other mistake I see all the time. It's like, my bank lender said no, or my other lender said no because of something stupid. It's like, yeah, well, they just saved your butt. Like the best deal you can make is the one you don't do. And if you have to go owner finance something, and the only way you can go sell this thing is owner financing, who's got the problem? You. Like, it's just a greater fool coming in buying it. So you have to, if you owner finance this thing, the only possibility you selling this thing is to another greater fool on owner financing terms. So again, the lender's your friend, but I think there's going to be a large market opportunity for people that are like, I don't want to go through what I call the 2 rubber glove treatment to go get a dang loan that's debt services at a 1.5. At a 65% or 60% loan to value. Is like, holy crap. Like, if this thing goes down, like, there's still 40% equity there. We're still 40% in. What do I have to do all these other covenants for you? So I think it's a great opportunity. I think there's a lot more coming this way, and people will pay a higher interest rate and higher fees for it.
Billy, I imagine you've gone through some different iterations of business and partnering. What are some lessons that you've learned the hard way?
That's a touchy one right now because of what happened. I can't give the details on the podcast, but I tell you this: trust your gut with people. You cannot make a good deal with bad people. There are evil people out there that will, snakes in the grass that will rob you. Selecting your team, your CFO, financial reporting is huge. If you do not have a background in that, and you're just blindly handing over your financials to a bookkeeper and all that, and you're having to check that yourself, like, you better learn pretty quickly if they're doing it right or wrong. So you get the wrong person, they have no recourse if they're doing it right or wrong. You would think that they would as professionals. They don't. Property managers, when it comes to real estate, is where the rubber meets the road. Our project up in Lexington, in the middle of all this, I think we went through 3 property managers in 1 year and finally had to go self-manage. Just because one of them robbed us blind, and it was just feed us to death. Like, this is just awful. So those are 2 big
Billy, when it comes to a CFO, it sounds like you've learned the hard way what not to do. Next time you want to go hire a CFO, what will you do?
Ask a lot of questions. There's no dumb questions out there. It is your money, your business, your livelihood, your everything. ask a lot of questions. Why is this there? Why is this categorized as there? If we do it this way, what's the implications there? And like what, yeah, it's GAAP. All right, cool, that's fine. I know it's legal. I know it's a way to go do it, but there's lots of ways to go do this. What does this mean? And then on the taxes as well as how the other question I'll see folks don't know is the tax. What's the tax implications of us doing this? I know it's a good idea as far as it looks like this, but what about the tax implications? Same with the attorneys. They can tell you a lot of great legal things, but sometimes they leave out the tax implications because they don't know, and they won't get two together. And sometimes I would just tell you, like, it's worth the money to just get your CFO and your attorney on the phone and go, all right, if we're going to go do this, what's the y'all talk here? I know it's going to cost me like $1,000 here for this hour. I'd rather do that than get a larger bill in the mail from the IRS.
That is great advice, especially, ongoing. Once you already have your team in place and making sure the legal side and the tax side, for whatever reason, it's so hard if you aren't big enough to have a family office to have those two sides come together and have the right conversation. But let's say you haven't yet picked your CFO. What are some questions you should be asking or red flags you should be looking for when you're looking for a CFO?
Yeah, if you're right off the bat, you're going to get a fractional CFO. There's a lot of fractional CFO companies out there. I mean, the question there is like, define the role. What exactly you need from a CFO, and then what that service is offering, and be able to match that up for a dollar. I mean, you're going to pay $300, $350 an hour for this. Like, but what am I getting and when? And putting those in place, like you cannot be getting, especially your bookkeeper, I cannot be getting end of the month books at the end of the month, the following month. It's got to be like, I need this here. So cool, you're providing this, but what happens if you don't? What's the implications there? It's like, I'm still paying you whether you perform or not. So you got to put some stuff, some carrots and sticks in there going, hey, if I don't get this by the 10th of the month, then I'm not paying y'all. And the other thing is like taking the lead and being strong with these, because they're C-suite alpha people. It's like, you got to be strong with them. It's like, this is my effing money. It's like, I need it done this way in order to make my decisions. So we're going to do it this way. I need it here. If this doesn't happen, like these are the implications that can happen. Otherwise, we're cutting ties, moving on. Like I'm running a business here. I'm not like here to go employ you just to go, play around with Excel.
Billy, what's the biggest shift in strategy with real estate that you've had in the past 5 years?
Geez, I mean, that's like 2019 to 2024. That's like 7 lifetimes for people when it comes to real estate. I tell you, the biggest thing I saw is that where there's not disruption. What's the word I'm looking for? There's a word I'm looking for here, but not the things that aren't efficient are ripe for disruption. And real estate is inherently inefficient, which is good, it makes it for opportunities to come in, especially locally. Non-owner occupied investment properties, unless it's like a really great deal, I'm not interested in it. Just because there's so many people, there's so much money coming into those type of deals. And the only thing that's left are deals that you have to go work for it. I'm not in a place at my age and where I'm at to actually go work for this thing and actually manage it and all that. Like, I want more passivity. So for the triple net leases, more commercial type of properties, I don't want to deal with like multifamily. I'm not really interested in hospitality, even though those are, I know that reprices at the market basically every day. Cool, that's great, but that's just too much risk for me. I'm more passive. I mean, I'm looking for businesses that you invest your expertise into and your network to go grow. That also has real estate. So there's ways to go negotiate your power as a person and your network to be able to go do that versus I'm going to go stroke a check for 35% down for a piece of property. Now I have to go find a manager to manage this thing, and I'm getting a 6%, 7% cash on cash return. Yeah, it's tax advantage, but that doesn't excite me as much. For me, it's looking at the other opportunities out there when it comes to real estate. Real estate is a small piece of the whole investment pie that you can go do. And in my life, like, I don't necessarily need, I want a higher return for my time. So the businesses that are using the real estate is what I'm looking for. I think that's where the biggest opportunity is.
Billy, I appreciate you sharing so many insights today on active investing as well as the brokerage side. I'm sure the listeners got a lot of value out of it. And if the best ever listeners do want to reach out to you, how can they find you?
Pretty easy. We'll put in the show notes. I'm sure my personal website is Billy Brown, my name, like Mary Edward. And you'll be able to come up and be able to see me. There's a page there and go contact us on any kind of debt that you need, or podcast inquiries, or I have plenty of resources out there to be able to help borrowers speed up their loan approval. That's a free download as well.
Awesome. Well, thank you, Billy. And thank you, best ever listeners, for joining us today. Please leave us a 5-star review and share this episode with somebody who could find it useful. Please also follow, subscribe, and have a best ever day.